How's it going? Another weekly update. It's been a couple weeks since the last video, I think about 2. I just mainly forgot to do the previous one, so apologies for that. But let's just continue with this. A weekly update on the weekly paying dividend portfolio journey. It's pretty smooth. Let's see, on a daily, 208, up 0.44%. Weekly, up 4%. Monthly, up 13%. I don't know how this is. And year to date, we have not only surpassed the previous dip, but we have now increased it. Not only is this a reflection of how much is put, this is not only a reflection of the account as it is, but I have actually pulled out every single dividend to pay for the loan. All of it. There is not a single dollar that was used to reinvest in this thing for the past month and a bit. So it survived that, and not only has it survived that, it has surpassed that. That is to say, the market conditions are really that good right now. That's all I'm saying. In terms of the equity of the 4 main core positions that we have, not only are we maintaining the previous requirements that I've had, or the maintenance numbers that I want to keep, which is 30K, 15K, 10K, 10K, we're not only maintaining them, we are exceeding them. YMAX is now bumped up to 32K. Ulti has bumped up to 16. RDT has bumped up to near 11, and LFGY is nearly bumping up to 11. At times it is hitting 11, at other times it's back down here at 10. But we're nowhere near in the world of decreasing, where I have to put in my own money or reinvest the dividends. Neither are needed. So kind of crazy. The estimated dividends, I can't just give you an estimation. I can actually show you the full number. So let's do this. The full numbers and dividend payouts, as you can see, we are almost paid off of the initial value that I put into this account all the way back in December, which was $12,000, is about to be paid off. And we are doing it at a neck-breaking speed. It makes sense, because at the start, this income is not what grew this account fully. We have also put in a significant amount in the first place. So that's why we're increasing. But this does mean that we got our money back, which is huge. This thing part worked. I can't say that for certain yet, because we're not hitting 100%. But once we do hit 100%, I will update it to include the amount of the loan. And thus we will start again from whatever percentage that will be. Of course, it'll be 0%. Or I could just increase this number, the 12,000, increase it and add on to the loan. Let me know what you want to do. I think I'm going to go with the latter rather than the former, because it makes more sense. Just add it on rather than put it back to 0, because then what happens to all these numbers all the way here that are adding up to the first 12,000? It doesn't really make sense. But I could set up a second goal down here. Like, this will be the first goal. I could type it like initial lump sum, right? And then the next one would be loan, right? Once the loan 1 is paid off, we take another one, loan 2, loan 3, 4, 5, etc., etc., etc. Of course, they would exponentially be faster and faster, because I would just be taking like small loans, which will be paid off in a couple of months, if not at the speed we're going, maybe a couple of weeks. The optimism is blaring, but let me take away that. The week before, we got paid about $390, $40, just about quick mass, 500, 6, 7, about give or take $700 something dollars. Amazing. On track to the 3K monthly that you see here on the left side. The yield of the account itself is it's crazy high, 52%. And just like the 52% yield, that is also the margin that we are taking of the account here on Robinhood. We are 47,000 account, but we are taking a 23.5K margin, which hopefully you know that means it's 50%. You can also see it through here, the part that I'm highlighting. The portfolio maintenance is 56%. That means the equity is, give or take, 44% of that. Not doing anything for protection, ignore that. What else can I mention? Payday will be this week, and I think it's on the spreadsheet. I think I put it in recently. Yes, the spreadsheet here. These will be the payments that are coming in: 240, 80, 320, 320, 380, 600, 700, just about $700, give or take. Another $700 a week. It's insane that Reese just earlier on this year, we were talking about, let's go all the way back. We were talking about 13, 20, here, 10. And then we were talking about 50, 60, 70. We're talking about $100 to $200 days. And now we're talking about dang near hitting $1,000 weeks. I know we're still a ways away from there, but with the speed at which we're going and the exponential growth that we're having, it's really not just a dream. I hope this is encouraging for those that consider to take this route. And there's no course that you need to do to buy from anybody, not even from me, because you're getting exactly what I'm doing and exactly what I'm buying, which is the same for core positions, and then maybe in the future buying side positions that are more focused towards single companies. But at this moment in time, everything I do is indexed and or is a fund of funds. Example, LFGY is basically a crypto fund of funds. RDTE is a Russell index. Ulti is a fund of funds of very high volatility funds. IMAX is a fund of all those funds combined. So the more we diversify, the better. And it's really showing dividends, not only with the market, and we can even do a comparison to the market, I hope. Let's see here. The profitability of our account thus far, you can see every single digit here in the top right. We have been paid dang near $10,000 in dividends, $9,000 to be exact. We paid about $433 in fees. These fees include basically margin, the monthly margin that I have to pay, which is this number, 23,500 multiplied by 0.0575, which if it didn't fluctuate, bring out the calculator real quick. If it did not fluctuate, then that number will be this year divided by 12, this per month. 112 minus the 3K that we're getting monthly. Yeah, quite fine. We're doing very much fine. Now, I have been given a question which I thought was pretty interesting. There is a fund known as, if I just pull it up, it is known as Week. And somebody tried to make the bright idea, I don't say this rhetorically or in a rude way, but they were essentially saying that why don't I just put everything on Week right here, Roundhill Weekly T-bill, get paid weekly, and put all of my margin on Week, since it's such a sustainable and it's a T-bill, which is essentially like very, very strange trading fund, mostly invest in investment grade income. So it's essentially supposed to not be moving in terms of its paying. It's based on the treasury bills, with maturities of between 0 to 3 months, and it was launched just recently. Now, how do I say this in a very nice way? It pays one dividend yield, right? And even let's say this, let's be double it. Let's say it pays 3%. In a year, you'll get paid 2 to 3% of your margin. For me, that would be 23,500, right? Let's bring out the calculator. 23,500 multiplied by let's say you have a 3% dividend yield, right? So you're getting paid $705 per year on margin. But the problem is even to have that $705 that you got paid for, you're paying 5.75% interest per year to borrow this money. Now, if we take that number, it's bigger than the number that you would have gotten paid for dividends. So you're at a net loss of, what was it, 700 something? Let's be generous. Let's just say $799. You're still at a net loss of $552. Now, unless your treasury bills start acting like S&P 500, giving you an average of about 8 to 10% per year, even then, I know why you would consider that. It's just not the play. Now, would you put your own money that's not margin? Sure, go at it. I think that's perfectly fine. I have nothing against that, but it just doesn't make sense in terms of doing it for Week, the WEK dividend here, because your dividend yield is lower than the amount you have to pay in interest for borrowing the money. It's like you're borrowing against yourself. and some. It's like you owe money. That it didn't make much sense once I did a little bit of research. And again, this is just very surface level, but I just thought that would be a good topic to bring up in reference. What else can I bring up in terms of long-term goals? Long-term goals of the portfolio is number one, the very long-term goal, which is about to be a short-term goal soon. 87% paid off in this, and at the rate we're going, if we're getting about $700 to $800 per week, let's scratch that, $600 to $700 per week, then we're looking at paying this off in about 2 to 3 weeks. That's 2 to 3 updates from now. After that, I will it with the loan, put it maybe here, or add it to this total, and then this percentage paid off will go back down to whatever the number is going to be in relation to this. Now, what else can I bring up? I was getting asked another question in relation to how I was using. This is just Snowball Analytics. I'm pretty sure I said before, the description has like an affiliate or something, so that'll help me out if y'all wanted to, but no pressure or anything. I just like it because it gives me all the raw numbers. And instead of looking at Robinhood, which does not take into account dividends reinvested or dividends taken out and doesn't apply all those numbers, it doesn't really give me a perfect description of how much I've actually made or lost in my investment in total in relation to the dividend, because it's just just focusing on capital gains. So from the Robinhood app, it can look like I'm losing money. Actually, it does. I'm pretty sure. Like if I go, wait, yeah, okay, here, left. If I scroll down, see, it shows realized profit loss. Year to date, $2,000. I'm negative $2,000 on Robinhood right now. I don't do the plays. All I did was that was due to the reassignment of all of my stocks. You know, you can see here in the spreadsheet, I had YMAX, OR, RDTE, NVDY, MRNY, all these extra ones that were singles, and I had them as satellite positions to my main core positions. Removed all that, indexed everything, so that way I had very simple, but some of them were sold at a loss, and also the fact that I was doing the protection put to protect myself during that risky time and gray time of the market at the start of the year, which there's also videos of that and exactly why I did it. So it doesn't take into account all of that. So it just shows capital gains wise, I'm down $2,000. But if we flick through here in Snowball Analytics, it takes into account all of that capital gains, fees paid, even margin. It takes into account margin too that I've been paid off. And realized profit and loss. Again, those are from the side positions that I had. They were relatively small, so sold at a relative loss. And it shows the dividends paid, and it takes into account the whole number. So this total profit is taking into account dividends paid and fees as well as capital gains. I just think it's got a better overall outlook, so that way I can look at that and be like, okay, so I have this much money, but in total, I'm still up. In terms of dividends, I think I'm pretty sure RDTE is about to get paid off. What I mean by that is about to break even. Yeah. We're about to break even. We're nearly there. We are negative $2,000. If you look closely, you can see I got paid about $2,000 in dividends, and the gains is minus $2,271, meaning that since I've had this since January, I think I bought this back in January or early December. So this is one of the earlier buys that have just stayed consistent the whole time. I never bought more or sold any more. So it's a true reflection of the market, not only the market's recovery, but RDTE and Round Hill's ability to still pay out even during the bad times and now paying through the good times. Now, these positions here, Alti, YMAX, and LFGY, are earlier positions, but they're paying out way more. And not only are they paying out, but they're also in profit and or slightly negative, which means their overall total, like getting paid K in dividends, but only being down 2K in capital gains, which aren't even finalized because I haven't sold and I won't sell for these. So this capital gains number actually doesn't actually mean zero to me. The dividends received part is the only thing that matters, and it's already beating everything. Same with Ulti. I can sell Ulti for a slight loss of $95 right now, but I've made over. Oh, sorry. No, I'm sorry. I read that wrong. I can sell Ulti for a gain of $600, even though it's paid me near $1,500 during the same time period that I bought it. Same with LFGY. Selling something for more than what it's worth when I bought it before, even though weekly it was paying me damn near $1,000, $100. This could be just the market in its higher highs, and I do understand the crypto market is booming right now with the increase in Bitcoin and such. But again, I like to diversify. I didn't choose a single stock. I don't choose single stocks. I diversify as much as I can by fund of funds and by ETF based things. So that is why instead of buying like MST or name your thing here that's related to crypto, I just bought the fund of funds LFGY, and it seemed to work out so far, especially since Bitcoin is now 119 grand. And even though that says minus 0.773%, I promise you, in the past week, in the past month, in the past 3 months, it is yeah, because I do remember $100,000 only to then currently in July being like 100,000. Wow, how times have changed. How times truly changed. A little bit much longer gaps normal, mainly because I'm trying to make up for the fact that I lost last week. Just, life be lifing. That's all it is. Try my best to update again next week. And what I will do is, again, I will put the $700 that this account is paying me and put it straight to paying off the loan. As long as we're up here, why not? I don't see a reason why not. We could do half and half, but at this point, I'd rather see this number in the spreadsheet go higher and higher than the number in my Robinhood, because the equity of these stocks are not only maintaining, but they're increasing. So I'll make the most out of it and secure gains now rather than trying to dividend, reinvest it, and then suddenly we get a drop again. I'd rather secure a slight bag now, secure money guaranteed, than trying to stack up. But yeah, that's so much for sticking around. If you made it this far, I appreciate you, and I'll talk to you next week.